The investor who made a fortune predicting the collapse of 2008 has finally left the financial stage. Michael Burry, the man who sounded the alarm when the whole world covered its ears, has officially closed Scion Asset Management. On November 10, 2025, his fund withdrew its SEC registration. This isn't a routine business closure. This isn't burnout. This is the clearest distress signal since 2007. 2 weeks before the total liquidation of the fund, Burry told his investors something that chills the blood. "My estimation of value in securities is not now and has not been for some time in sync with the markets." Read that again. The man who spotted the rotten mortgage bonds years before the explosion is saying plainly the math doesn't work anymore, and when the math breaks, systems collapse. But what he did right before walking away might be even more important than his words. His farewell 13F filing revealed colossal long-term put positions, $912 million against Palantir and $186 million against Nvidia. Options expiring in 2026 and 2027. This wasn't insurance. This wasn't a trade. This was Burry going on the record, possibly for the last time in his career. The artificial intelligence boom is not just an overpriced sector, it is a bubble on the scale of the dot-coms, but embedded into every aspect of the economy. The most disturbing question isn't why he shut down the fund. The question is what he sees on the horizon. Michael Burry never just leaves, he executes a strategic retreat. He disappears when he is certain the system is standing on the verge of a reset. He did it in 2005, long before the world learned the term subprime mortgage. He stopped public commentary in 2019, right before the crash caused by the pandemic. And now, for the third time in 2 decades, he has completely removed himself from the markets, but this time is different. In 2008, the crisis was localized to housing and banking. In 2020, the shock was biological and logistical. In 2025, the threat is structural, global, and systemic. It is a market priced for perfection in a world that is barely making ends meet. Let's break down the signals Burry left before pulling the plug. When people like him go silent, the clues must be found in what they stop talking about. One day, the stock market completely detached from reality. Burry built his name on understanding intrinsic value, debt, cash flows, balance sheets, hard foundations. When he placed over $1.1 billion against Palantir and Nvidia, he wasn't betting against bad companies, he was betting against a sick environment. AI sector valuations have decoupled from profits, revenue, and even technological capabilities. Companies with no clear path to profitability trade like mega corporations. Firms with slowing growth are worth trillions, and expectations for AI adoption have taken on the character of a religious cult. When fundamentals diverge from price, bubbles inflate. When bubbles inflate, leverage grows, and when leverage becomes critical, crashes follow. This is exactly what happened in 2000. This is exactly what happened in 2008. It is on identifying these patterns that Burry built his reputation. Central banks are tightening the screws. Nations are drowning in debt. Corporate loans are rolling over at higher rates. Delinquencies on consumer loans are skyrocketing. We are in a global environment where liquidity, the oxygen of markets, is being cut off. But tech stocks are behaving as if liquidity is limitless. This is the divergence Burry is talking about. My estimation of value is not in sync with the markets. Translation: prices are a fantasy, risks are real. For the first time, he has stopped fighting the market. Burry made his fortune by going against the crowd and being right, but his current departure shows something new. He no longer believes the market functions on fundamentals or even on standard mania. He believes the market has become unrecognizable. It is a place where signals are broken, where the price discovery mechanism is destroyed, where truth is suppressed by the momentum of the crowd. When the smartest contrarians move to cash, it isn't cowardice. It's a sign that the system has gone too far to even short. He didn't give up. He simply refused to play with marked cards. Burry's warning isn't about Nvidia or Palantir. It's not about AI stocks. It's not even about the S&P 500. It is about the macro pattern that every empire faces in its final phase. Debt grows faster than productivity. Optimism grows faster than reality. Financial assets inflate faster than the real economy can support them. 3 structural signals Burry has been tracking for years: the everything bubble phenomenon. For decades, we dealt with isolated bubbles: .com, housing, crypto, meme stocks, SPACs. But now bubbles have inflated simultaneously across all asset classes: real estate, stocks, tech, corporate debt, sovereign debt. Everything is overpriced. History teaches when an empire reaches this stage, the correction isn't sectoral, it becomes systemic. The global dollar pivot. For 80 years, the dollar was the backbone of global finance. But the last decade has shown a shift. Trade in yuan, BRICS with their commodity alternatives, record gold purchases by central banks. The dollar hasn't collapsed yet, but it is losing dominance. And when a reserve currency weakens, bubbles inflate artificially because capital has nowhere to run. Until suddenly there is nowhere left to hide. Burry sees the danger, a dollar-dependent market priced as if the dollar is immortal. The productivity versus debt mismatch. In 2008, debt outpaced real growth. In 2025, this gap has become a chasm. AI was supposed to be the salvation, the miracle technology that would boost productivity. But real leaps in productivity aren't here yet. However, the debts are real, the valuations are real, expectations are inflated to impossibility. When expectation meets reality, catastrophes happen. Burry's puts on AI are not a prediction, they are a timestamp, a message in a bottle, a final warning. Why did he close down right now? Why walk away when his bet on an AI crash could become legendary? Because Burry isn't trying to be right again. He is trying not to be trapped inside a system that, in his view, has passed the point of no return. Regulatory pressure. Massive short positions in major companies attract attention, from regulators, institutions, politicians. Burry does not operate well in an environment where narratives are more important than truth. He remembers 2008 when banks and media tried to discredit him. He doesn't want that war again. The market is ungovernable. The deeper the bubble, the harder the timing. In 2005, Burry was too early. He suffered, investors revolted. He won, but at a high cost. Now he is not willing to fight a market driven by retail mania, algorithms, central bank interventions, and AI trading. His job is done. Burry has already issued the warning. His positions were public. His exit was public. When the smoke clears, history will say he tried. His silence now is not flight, it is the heavy silence of a man who has seen this movie before, and here is the part no one wants to hear. If Burry is right, and his career suggests he often is, the next phase won't look like the sharp crash of 2008, it will look like a slow, grinding correction that erodes savings, retirement accounts, tech valuations, housing, and bonds, all while the world searches for a new financial order. Because when bubbles burst, reality is exposed, and when bubbles are global, the reset will be global too. The U.S. will adapt. The dollar won't disappear, the markets won't evaporate, but they will reprice. Violently, comprehensively, and unavoidably. And Burry has chosen not to be within the blast radius. Markets don't crash from fear. They crash from certainty. Certainty that tech can only rise. Certainty that AI will grow forever. Certainty that rates will fall. Certainty that this time is different. Every bubble in history ends with the same stage, arrogance. And every crash begins with the same realization. Math always wins. Michael Burry is stepping into the shadows because he knows what comes next. Not tomorrow, not next week, but soon. The warning has already been issued. The only question is whether anyone will listen this time.